Let's put your macro hat on for a moment, given that the Fed is going to be meeting later today. What do you think Jay Powell should be doing? What would you tell him if he was watching right now?
Listen, I think he threw us all off track a little bit 2 meetings ago when he said, I'm going to raise rates and then pause and watch. And, he had to backtrack. The last CPI number was bad. And so I think he's going to go, I'm going to raise rates. I'm going to stay vigilant. And I'm going to raise rates until I see inflation start to crack. We have this tale of two economies. On the one hand, you look at the FedEx report, or what you just heard about, New Jersey and how many businesses think they're going into recession. On the other hand, you have services economy booming, and you still have really sticky inflation and owner's equivalent rent in labor and wages. You've got a settlement coming with the railroad workers. It's roughly 5-6% a year. And so I think he's in a tough position. He's going to have to stay hawkish. I don't think the markets will love it. That said, we're starting
How hawkish are we talking, Mike? Is this 75 basis points? Is it 100
it's
basis
75,
points?
Yeah, they're going to go 75 basis points. I would be shocked if he goes 100, given what their
by the end of the year, how high has he gone?
He's going to go 75, 75, and then probably pause, or 75, 75, 25. I think we're getting towards terminal rates at 4.5%. That's priced in 4 to 4.5. Though you're kind of, Pollyannish to think where this is going to stop, right? We haven't had inflation since 1970s, and there's all these mechanisms. I've got a stake in Bojangles. And it's interesting, right? When you're a chicken business, food prices went way up, labor prices went way up, margins come down, you finally raise prices, and that cycle just keeps going. And so you're seeing that in all kinds of businesses. Right. And so I think really understanding inflation is a mystery to a lot of people in the markets because we haven't had it. And so that's where I kind of think picking terminal rate is a difficult game right now.
Mike, as a result, though, of that prognostication, it has been bad, as you know, for all risk assets. That means equities and also crypto. Would you own either? And I know you're heavy, I think both, or at least crypto.
I'm actually short equities in my, personal account and against crypto. I'm long crypto. Listen, crypto is a tale of two time frames. In the short run, we've got these macro headwinds and the markets trade really poorly. Right? You get a rally up and they come right back down. That's almost all macro. In the medium term, you see adoption. You saw today the NASDAQ announced that they're going to do custody. You had Ken Griffin and Citadel. Ken's one of the sharpest guys on the planet, announcing, his new crypto exchange. BlackRock getting engaged. So you're seeing this massive move where institutions are building infrastructure, are investing in the space. That's not directly buying Bitcoin and Ethereum yet, but it's laying the foundation for an inevitability.
But is the truth, would you ever think about hedging your crypto at this point in the same way that you're saying you're hedging the market by being short equities? I could argue to you, at least short term, and maybe, by the way, I could argue short term is going to be tough for equities. That might be a good short right now. Long term, you'd like to be optimistic about equities over the next decade, I would think, in the same way you might want to be long term about crypto.
We certainly, move our positions up or down based on how we think the market's going to do. That said, we keep kind of a core long. We're a public company that's got a crypto mandate. And so.
But if you didn't, I guess the question, and it's hard for you to answer.
I wish I'd sold a lot more at the beginning of the year. Yes.
If you didn't have the mandate, how would you think about crypto?
You'd be more neutral here. You'd be more neutral here, and you'd be waiting to see the Fed pivot. And then I think you're going to see a big rally in crypto. What
do you think the upside, downside is right now, both in terms of equities and crypto? And do you think that there's going to be a break in the correlation anytime soon?
I think crypto, Bitcoin, let's start with Bitcoin. There's a put in Bitcoin somewhere because you just see these institutions all getting engaged slowly. And so when I see this adoption, when I see BlackRock, doing a deal with Coinbase and their own fund to be on Aladdin probably in the first quarter, you just know people are coming to buy. And so, could Bitcoin go lower? Of course it could, but I don't think there's a catastrophic fall in it. Ethereum has had a pretty big move down, right? We had the merge. The merge was an amazing accomplishment in lots of ways, right? It showed that a decentralized community could accomplish something that's really complicated. And so I think we'll look back on that as something really significant. You know, Ethereum had gone from 1,000 to 2,000, and so now you've had a real big pullback. It feels like 1250 should be the bottom here, and so I think you're closer to the bottom than the top. Again, a lot's going to depend, and this sounds crazy because you're looking at long-term investments that are going to depend on short-term data, how the next few CPI numbers come out. Like the Fed is kind of handcuffed to the next few CPI numbers. Most likely, we know Powell wants to pause. You know, you hear the Barry Sternlicht argument on your show or Jeff Gundlach that, you know, Fed policy comes with a lag. It does come with a lag. You know, Jay Powell knows that, and he's balancing that for his credibility. And so I do think we're closer to the end of the fixed income move. But to say that with huge confidence would be hubris.